Hello and welcome. Chinese companies are investing aggressively in many parts of the world, in Africa, in Latin America. But also interestingly, China is inviting companies from other parts of the world to invest and takes pains to point out that it is a freer domestic market than most people assume. Well, how free is it? And also, what are the real intentions behind China's expansionist ambitions, particularly, or of Chinese companies' expansionist ambitions in other parts of the world? Well, joining me to answer that question is perhaps the most qualified person we've spoken to in this round, Timothy Stratford, partner at Covington and Burling, a company or a firm that has presence in China as well as in the US. He's also the former assistant US trade representative. Mr. Stratford, thank you very much for speaking with us.
Pleasure to be here. Thank you.
And I also noticed that you speak both Mandarin and Cantonese. How did you manage to pick up both languages?
I started with Cantonese actually as a young Mormon missionary in Hong Kong, and then I studied Mandarin in college before I went to law school.
And then you joined the government?
Well, I went to China first as a young lawyer in 1982, and then I joined the government in 1988. Then I went back into the private sector, and then I went back into government. Right. And now I'm back in the private sector.
Right. So tell us, you know, a lot of Chinese investment is going into areas where there are mineral resources, and of course there's manufacturing coming up. China is building roads in countries from Sri Lanka to Pakistan. How does one, you know, let's say sitting here in India, look at and interpret this sort of fairly aggressive moves to grow?
I think there are a number of reasons that China is investing overseas. This is a relatively new development. For so many years, they were keen on attracting foreign investment into China, and now there's a real push to encourage their enterprises to invest overseas. So what's behind the push? One, obviously, is security for natural resources, and so they're interested in securing, you know, energy and other types of important mineral and other resources. So that's one driving force. Another one is for technology and market access and managerial skills. There are a number of Chinese companies who have been very successful in developing their position within the China market, but they realize that the China market is not going to grow at that rate forever. And they also recognize that if they truly want to be competitive, they need to compete with foreign companies. Sometimes the best way to do that is to acquire a foreign company that has the sort of technology and maybe brands and distribution channels that will help them to enter other markets.
Right. So you talked about, you know, the resource push, so to speak. The fear in the outside world is that there is not much distinction between the business and the geopolitical objectives of this. How do you see it as someone who's sitting in China?
Well, I think in some cases, those types of considerations might be behind some of the investments because, you know, China's leaders quite naturally want to make sure that they have secure supplies to fuel their continued economic development. So that, you know, certainly would be behind some of their thinking, and I think that's understandable. I think that a number of companies, foreign investment is relatively new to them, and they're learning how to do it. They're learning about local laws and customs. They're learning about things that maybe are too aggressive. They're trying to tone themselves down. I know that the Foreign Ministry is also very interested in working with companies not only to make sure that what they do is consistent with China foreign policy, but also so that it won't reflect, so that the behavior of companies will not reflect poorly on China.
That's interesting. So how does this manifest itself? I mean, are any instances that you've seen of this being played out?
Well, I think Chinese companies, for one thing, if they want to invest in countries where it's quite sensitive, there is a consultation process with the Foreign Ministry as well as with other Chinese government agencies that approve foreign investment by Chinese companies. So the Foreign Ministry likes to be kept aware of these things because they recognize that Chinese companies could have a positive impact on China's relations with other countries.
So you're saying outward investment has to be bounced off the Foreign Ministry?
No, only if it's in particular sensitive countries. Okay. There is an
regardless of size?
They may have different size process too. I don't get so much involved in that because usually the Chinese companies don't ask our law firm to help them with Chinese government approvals.
Right. So, and what about the domestic market? There's also a big push or effort to point out the free nature of the Chinese domestic market and the opportunities.
I think that it's fair to say that China's investment environment has been more open than a lot of countries. And I think that that has been a very important part of their economic success over the last 3 decades since they first opened up in 1979. Having said that, foreign companies who've now been there for quite a while continue to bump up against some of the remaining restrictions. And so there continues to be a kind of a dynamic between China wanting additional investment, wanting investment particularly that will help them to gain new technology and new skills and so on, welcoming that investment but not opening up in some sectors where they hope that they can still foster national champions. So there's a kind of an adjustment process that goes on as China continues to gauge what its needs are and how it should open up in different sectors.
Right. Let me come back to outward investment. What's the kind of size or scale of investments that you see happening in the next couple of years? What kind of areas or geographies will that go?
Sure. As part of China's 12th five-year plan that was issued in March of 2011, China had a goal by the end of the 5 years, by the end of 2015, to have total outward FDI of around $150 billion. So that's the goal that they want to attain. In fact, there was a recent acquisition by China National Offshore Oil Company of a Canadian company, Nexen. Our firm actually was involved in helping them to get the U.S. government approvals for that transaction.
That was a landmark one.
That was a $15.1 billion acquisition, so that's 10% of the goal.
And also surprised many people because the previous attempt to acquire a company in the U.S. failed.
Well, the previous attempt to acquire Unocal goes back, what, six years or so.
Right.
And what a lot of people don't understand is that since that time, China National Offshore Oil has been able to acquire interest in Chesapeake Energy in the United States, rather large acquisitions also. Usually people in China hear the bad news when some transactions are blocked, but they don't necessarily hear the good news. And in terms of that earlier transaction, it wasn't actually blocked by the U.S. government. There was political opposition, and so the bid was withdrawn, yes.
Yeah. So these are some of the challenges that will be there. But you're saying that there's $150 billion waiting to be invested out. Some of it has begun to be invested, but there's still a lot of runway ahead.
Right. The goal is to grow outbound FDI by 17% a year. And during the previous 10 years, it was growing from a very small base, but it was growing at, what, about 45% a year. So I think there's a tremendous potential for outbound investment. You have a lot of Chinese companies that have kind of gone as far as they can in the China market, and they have a lot of cash, and they know that they will learn a lot if they work more closely with foreign enterprises outside.
And would a lot of this be in the energy space, or would there be non-energy investments as well?
Energy is where they're looking for natural resources, but it goes across the board. I was just talking last night with a Chinese company that does construction equipment, and they've had a huge boom in infrastructure development in China, and so in China they've grown by about 60% a year for the last decade. But they realize that won't happen forever, and they want to get into other markets, and they recognize that if they could acquire some foreign companies in their sector, use their cash, they could up their quality and their technology level of their products and also develop distribution channels in other countries. And so you see that same type of mentality across a wide range of industries in China, which is, and we're not just talking about, you know, major centrally owned, state-owned enterprises. We're talking about enterprises throughout China. So if you look at any particular industry, if you look at who are the leaders within China in that industry, there's a good chance that they have a plan to try to go abroad.
Right. It's a pleasure speaking with you, Mr. Stratford.
Thank you.
So, say xie xie.
Xie xie.
Thank you.